gathering of the Caylum Trading Institute, Defying the Odds, 4 decades of trading success. To those who have suffered through the interview application for Caylum, we have made it repeatedly clear that we aim for our students to be exposed only to true practitioners in the industry. Defying the Odds resonates that very principle: to connect our community with individuals who have an exceptional track record of outperformance, to have built a solid foundation of wealth through their deep understanding of how the market works, and with a level of consistency that has separated them from the rest of the herd. Professionals and experts in every sense of the word, not merely in theory, but by practice. Tonight, it is our absolute pleasure to bring to the stage 2 of the greatest examples of these values that our market has to offer. In the 4 decades that they have known each other, this is the first time that they will be sharing the same platform, and we are honored that they chose to do it for us. So, without further ado, our first speaker for the night needs no introduction. In 1986, he founded Securities Incorporated, a proprietary trading and brokerage firm that has grown increasingly over the past 30 years, opening up vast opportunities to experience global markets for young aspiring traders. From 1994 to 1995, he was elected as a governor of the Philippine Stock Exchange and formerly served as the chairman of the Computer Committee for the Manila Stock Exchange. In 1999, he founded CitiSec Online, the first publicly listed online brokerage firm in the Philippines, starting with less than 100 customers prior to its IPO in 2006. COL Financial Group now tops the list with over 290,000 accounts nationwide. With an unwavering personal advocacy for financial literacy and to empower the next generation of stock traders, please welcome our chairman of the Caylum Trading Institute, Mr. Edward Lee. And of course, our guest of honor for this evening is the founder and chairman of Wealth Securities Incorporated, and from 1996 to 1998, he served as the chairman of the Manila Stock Exchange, and he continues that legacy as the chairman of the Manila Stock Exchange Foundation. He is currently the head fund manager of Phil Equity Fund, easily recognized as one of the top performing and longest running mutual funds in the country. Apart from serving as a board of director for various companies, he's also a member of the Ateneo University Board of Trustees, a columnist for the business section of the Philippine Star, and renowned author of Opportunity of a Lifetime. He boasts an impressive record for wealth management unlike any other here today. Ladies and gentlemen, please give a warm round of applause for Mr. Wilson C. Hi, how are the 2 of you? Merry Christmas.
Merry Christmas. Thank you for inviting us.
Kinakabahan ka ba? Parang kinakabahan ka. Okay, so first and foremost, let's start. Who has been in the market longer? Is it
Started in 1975.
You started in 1975. Wow. And then when did you start?
As a brokerage firm, I invested in 1983, but then changed to City Securities in 1986.
Okay. So when you started, how was it introduced to you? How was the market introduced to you?
Actually, I was fresh out of college. At that time, 1975, the companies that you want to go to is either Bancom or Ayala, so I applied to both. And so I got the acceptance to join Bancom in 1975. And they assigned me actually to the stock brokerage firm that they newly formed. They newly bought. So I didn't really, it's probably destiny. Although during the summer of 1974, I had an on-the-job training with multinational investment bank corporation. And also they assigned me to the money market and the equities desk. So that's how I started.
Was that always your dream to go into equities or investments?
No, actually, it was just destiny. I applied to a job and I just got accepted there, and it's not really planned. As many things happen, that's probably destiny.
Fate. What about you? Was it fate?
In 1970, I always share this since I don't really enjoy school, so I have to find time looking for extracurricular activities. So there's an organization which is what we call JA Philippines, Junior Achievement of the Philippines, which at that time is working with young kids to become entrepreneurs. And it just so happened that one of the mentors invited us to go to his office. He was working for Jardine Davis Finance. The mentor, the coach was Leo Alejandrino. He was I think he founded Peregrine after that. So when I walk into his office and I see all these charts, and I asked him, "What's that?" And he shared with me at that time about these are charts of mining companies. And he gave me a book. It's called Technical Analysis of Stock Trends by Edwards and Magee. That was really the classic charting book of technical analysis. So what I did was I read it. Since I don't understand it, it was very difficult to understand classic charting at the time. So what I did was I opened an account and just started trading like anybody else. And
That's
lost everything by 1974, right? So very different. By 74, since I got wiped out, I wiped out. 73, of course, was a bull market. 74, when the crash came in, I just got wiped out. So kick out in school, I had to look for a job. So that it's like I'm going to school, but I was working for Equitable Computer Services from 3 o'clock to 10 o'clock in the evening. So my parents thought that I was, or your grandparents thought that I was studying, but in reality I was moonlighting in a computer center. 8 pesos a day. Yeah. So very different, very different. But I started in 1973 speculating in the stock market. By 74, I'm gone. So that's how it is.
When you were introduced to the market, was it also on a technical analysis standpoint, or was it more on a fundamental?
Actually, they assigned me to the investment management division, and they asked me to actually look at stocks and study stocks. I reported to some bosses, and we had regular meetings to discuss the market. I was hired with 500 pesos, and I was just a telephone clerk. But I rose up the ranks because during our meetings, even more people that were senior than I am, it looks like my calls were just the ones that were correct. No? Maybe because I analyzed more, but apparently towards the end, my seniors were actually asking for advice from me.
I read that your calls, I mean, ever since you started, your calls in the market have been really
during the
on point.
meetings, yeah.
So did you start off with a mentor? Was there someone notable that you...
You know, I was probably lucky that I had a friend, actually the general manager, assistant general manager there was like a nerd, and he didn't really look at fundamentals. He didn't believe in anything except that he has this Edwards and Magee book with him every day, and he has this chart, and I sat beside him, and he was drawing his chart, and he didn't believe in anything. He'd buy, he'd take a loss. He was very disciplined. I think it's just, I don't know even where he is now. He's probably a hermit, no? But that's how disciplined he was, no? He was gonna buy, he takes loss, makes a stop loss, and he probably lost money 7 out of 10, but that winner would make him bawi all the money that he lost. No? So he was a mentor for me, but he didn't really was teaching me. It's just that I was sat beside him, and I learned on my own, talking to him and looking at the way he trades.
So in a way, it's about observation, really being able to focus on someone who's doing well And in the process, just being able to see what he's doing, you were able
Different chart is also, there was another person there that's using point and figure. And so I just observing what others do.
Fantastic. Okay, so can you describe how the local market was at the time? Is it very different from how it is today?
I think we were really a golden mining stock at the time, and it was very volatile. There was no cell phone. There was no internet. It was an open outcry system, meaning to say that we had to go to the blackboard. And that's where I met your dad, no, Edward, no, because we had to go to the trading floor to know what's going on, no? Because probably at that time there was no even TV, there was no Technistock, there was no call, and you probably had to listen to the radio, and the radio announcer will be telling you about his own stock, pretending that his stock is going up, getting excited without his stock, but actually mentioning just one stock, which is his own. So it was
Hyping in the 1970s, guys. Hyping in the radio frequency.
So you really had to go, and it was even we had to go there because you had to line up, you had to go to the blackboard, and you have to erase, and then even before going to the blackboard, somebody makes sulot and gets your order. So it's difficult. It was difficult to trade. No, maybe I'd like to tell you the story that. In the 1980s, actually, the market was practically dead. That was before the EDSA revolution in 82, 83, and I was trading currencies. No? And what I did at the time was there was no Bloomberg, there was Reuters, but it was on paper. There was no screen, and what I did was I asked my messenger to go to the office, because I was trading, to call me up at any time once levels are reached. And now there was also no computerized charting, so I had in my office as wallpaper charting papers, and it's logarithmic charting papers, and I had to do the charting by myself. No? So you had the Deutschmark, the dollar yen, so the whole office, and other currencies, and even gold. So every day I had to go look at the board, and I'd be looking at the blackboard, not blackboard, but the wall, filled with wallpapers, no, or filled of charts, no, to look at the currencies that were trading at that time, no, because the market in the Philippines was practically dead. It's probably less than $1 million a day. Probably we reach a low of 100,000 pesos a day.
So even in that kind of market, do you feel that there were opportunities to be made, regardless of the no volume, no activity?
That's why I had to trade currencies outside, no? And actually, very few people traded at the time outside. Very few people had that knowledge, you know. But I had some friends, again, mentors, that actually were trading. A few banks, probably people in Citibank that I befriended, and they were trading currencies. Mostly, they were trading against the peso, but it opened up avenues for trade. That was no euro at that time. That was Deutsch. The most currency, we were trading the Deutschmark, the Swiss francs. That's why Darlene is named Darlene May, no? For DM. Sorry about that, Darlene.
In terms of how you used to trade before, are the strategies completely like is it something that would still work today, do you feel, or something that just like you completely cannot use them anymore?
Well, if you understand the Dow theory, when you talk about technical analysis, market timing, it's just based on the human behavior. So understanding human behavior is the most important, because till today it still works. No, it's just that today you need to add a lot of other things, which what Caylum is all about. No? The framework was there. Before, like what Wilson said, we're basically trading penny stocks most of the time. All these mining companies, right? So if you look at even the podcast that we talk about, it's all about all these mining companies that we promoted and we operated. So those were the days And yeah, till today, it's still the same. I use a lot of price action. I use a lot of market timing just to be able to get into the market.
Was there a standard strategy that you were required to maintain when working for your firm?
I'd like to tell, maybe I'd refer to your dad, no, because Edward is actually a very keen observer of people. And while I was trading, he was the one who told me how I traded. And he said that your tactic of trading is, what do you call that? Full height, no? So I said, Edward, what does full height mean? Maybe, Edward, you should explain what full height means. But that's what he said. My style of trading was full height.
You have to correct me if I'm wrong. The way I observe Wilson's, the way he does it, he basically he invests in businesses. He identifies a stock is basically a business. So what he will do is that if he likes the business, he will accumulate it. And then what he will do is that he will sell and buy it back. Meaning it's a box. He has a box that he trades out of it. So he maximizes it. That's the reason why it's called the full height. Mr. C will not sell until it reverses. Let me just correct me if I'm wrong. Because that's how I look at him. He basically invests in a lot of companies, and it's like a supermarket. And then if he sees he will buy a little bit and then try to understand the behavior of the stock and starts accumulating it. Once he sees the beginning of the move, he will maximize it. He will go for the full height. And that's the reason why it came to that word.
Let's pull back a little bit. Both of you have never worked in the same firm, yet you were able to observe how he invests and how he trades. How did you guys meet to begin with? And then, because there were no cell phones back then, right? So
we were
do?
Beside each other. Our booth was beside each other.
We also normally had lunch together with some of our elder statesmen. I remember going to Smart Pansiteria, I don't know if it is, every day. We'd eat the same food, steamed bakoko. and so we normally had lunch partners with some elder brokers.
How old were you guys at the time?
I went to the exchange in 1986.
Yeah.
You were what? You were there already, but you became a member in what?
86.
86. Oh, same time. I remember we were together. I remember I was buying this company, and I was the only buyer. The whole market was collapsing, and Wilson told me, Edward, you're the only buyer left. I remember that clearly. It was 2.5 cents. We're buying. I was buying all alone. Was buying it. I was accumulating it.
Which company is this? You cannot say?
No, I can say, of course. It's Manila Mining. So the day when he told me the whole market is collapsing, you're the only buyer there. So when I took out my buying, the next day it was 1.5 cents. Ginanin na ako. I remember that. Edward, ikaw na lang na mag-isa. Oo nga, no? Tanggal ko, boom. So a lot of experiences. Yeah, we were beside each other. I remember that very clearly kasi ako lang nang titira eh.
Naawa na ako sa kanya eh.
I remember he told me
that's what you call a friend. No?
I remember that. So that's the sad part about me when I like a company. Wala na, lalabanan ko na, di ba? I mean, I did my numbers already.
So at the time you were already representing on your own City Securities?
City Securities. Na.
And then your booth was beside,
We're beside each other, yeah.
Wealth already at the time?
Yeah.
Wow, okay.
So, those were the days.
To protect each other.
No. He's watching. Malayo ako dyan.
At the time, how many of you were all together, like trading? Were there already a lot of firms? Or just, you said that in 1980s, the market was dead. So what was the situation?
1986 was after the revolution.
Yes.
So there are more participants.
So people started coming in to participate at the time. Okay, so there was a lot more volume. It was more exciting. What happened to Manila Mining? Why was it being sold down? Or the general market?
Because the colleague that we have is a very good salesman. He sold me. He sold me
But
the
didn't
story.
sell to him. So, nakalusot siya. Building wealth is what you are known for, or investing in great companies. Look and being able to analyze and find them. You have always been known for your stock picking, meaning finding companies that will last. And at the same time, it's more of an investment strategy more than anything. Can you talk a little bit about your philosophy in terms of how you look for companies? What is the criteria? How do you choose which are the stocks that you want to buy?
Maybe I'll tell you the stories of stocks probably I bought. No? One stock I bought was Jollibee. Okay, at that time the multiple was at about 10 times PE multiple. But there was a catalyst that was going to happen, which was imminently going to happen in about a year or so. Foreigners were not allowed to buy Jollibee because of the retail trade law. And so only locals can buy. They announced it that they will repeal the law, but nobody was buying. So I started buying on my own, and suddenly my clients started buying. My friends, like Aurora, Willie, the others, started buying too. Lo and behold, we had probably, we're probably one of those first, Edward and I were probably one of the first activist investors at that time. I think there was no such word at that time, but we were the ones who bought, so I accumulated probably more than 10% of the stock. No?
Do you still remember what year? Sorry.
93 or something.
1993. Okay.
Yeah. So these are, by the time, but even before the retail trade law was repealed, I found a way to exit it via a warrant, or what you call a PDR now, no? Depository receipts, wherein our shares were going to be bunched together with a company and sell it to the foreigner. No? That's why I became very good friends with Congressman Joey Salceda, because they were ING Baring, they were actually packaged it. No? So we bought it at 10, 12, and we sold it at double in about a year. No? So those are things that we looked at, but apparently the market at that time was not as the same as today. No, I remember a story wherein Sun Life and Manulife, I don't know if you know it, no, was demutualized, and they listed it in Manila. In Manila, the policyholders were given free shares, and most of them sold at any price. No? There was the price in New York. It was listed also in New York. It was listed in Germany. It was listed in Hong Kong. And the price difference was about probably 10% or 15%. And we knew that it was the policyholders that were selling, and the buyers were all the big institutional investors. We went out to make a pitch to ask clients to buy. To institutions, we went to the pension funds and presented the same principle that we said, this is you're buying the stock at 5-6 times multiple, and it's policy holders, and you're buying it at a discount, but nobody followed. I don't understand. I don't know, maybe Edward can explain, but the market was at that point was not mature enough to see this kind of gems, no, or jewels that was there. And they didn't really pay attention. There were so many other incidents that was happening where in the market didn't appreciate it. And so we just kept on buying, and even there was even an arbitrage opportunity, but nobody really cared. There's something that, but it's not the same now. It's not as there was opportunities like that probably happened in the years prior to. I think that was in the 1990s, no? But things changed towards the 2000s. Maybe Edward can explain why market didn't appreciate this. No?
I think, of course, you know that it's really lack of education. I mean, it's not as efficient as today. Today, I think there are more participants, right? You know, anything that moves people, the information is there already. I always believe that the Philippines is because of inefficiency, because of the illiquidity, you will have this kind of disparity. A lot of times there's an opportunity, or even up to today, you can see, like, for example, the drop this year, you can see a lot of stocks are being sold down indiscriminately, irrationally. So you get 50, 60% discount, right? So if you're able to pick it up, then you can see those rallies up. So I think during those times, Wilson's group are more sophisticated. I mean, they know all these things that's happening. Like us, I mean, we just look at price, right, without understanding it. So we can participate, but only small movements, rather than what they do is they're able to ride it.
I think you have your own stories about people not listening, about clients not listening, customers not listening. There was one, I think, in 2008 or 2007 when you were telling everybody about that you could already feel that something was happening in the US, and you were telling everyone, but for some reason a lot of people were not. Could you share that with us?
Well, we are more sophisticated today rather than during our time, right? So our time, during my time, I was always a market timer. So I can see things, right? But being able to explain it was more difficult because you have to understand the underlying stories, the reason why it's reversing. So, but we can see the reversals coming in the US, right? The sad part is that when we were telling our client to get out from here, because I remember when we started COL at 2005, we were educating people how to do market timing rather than an investment program. That's one of the reasons why is that by 2007, when the market crashed in July, we were warning people already. And then, of course, the market went up new highs. It's like a double top. By January 2000, when we did a briefing for COL, we warned them this is the last chance to get out. But still, people were not listening. Then by the time it hit August, I think August, we were warning about people were concerned about the oil because oil went to 120, 130, or 140. I said I was not worried about that. I was worried about the financial market because at that time, we were shorting the financial markets already. The Lehman, the Merrill Lynch, we were shorting on. The sad part is, I shorted Lehman, 45. Broke down 35, I covered. It went to zero. So those are the challenges that I have, right? See, I shorted Merrill Lynch also. See, so by the time October, I said, forget about it because nobody was listening to us. So what I did was I changed it to an investment program. So April and I, we decided to change the business model to just long-term investment rather than, so we started looking at fundamentals more than just technical. That was the reason. So, but of course, that was the reason why we started growing. COL started growing. Because at that time, when we were teaching people how to time markets, I talked to 100 people, probably only 2 will be able to comprehend what I say. Well, if you take easy investment program, wala lahat pwede magbukas ng account, diba? So it's fast. Market timers talaga. I've always been a market timer for so many years. I mean, like Wilson, I trade commodities. I'm a licensed commodity trader out of in Toronto. I trade currencies, the same thing. The only thing is I cannot teach that. We don't teach anything that we feel that the client cannot handle. Because when you're trading commodities, trading currencies, there's volatility. There's huge volatility and huge leverage. So even the house can go bust, right? So that's really the challenge of trading something you don't know and using leverage.
What's really interesting is that back in New York, when Mike Bellafiore was talking about the markets, he said 2008 will always be iconic to everyone. Because how they used to trade prior to that was very different. Everything changed. 2008, the way people saw the market, the way people changed their strategies and methods, obviously the sentiment was very different and has never really gone back to the way it used to be prior to then. In 2008, what was your experience with the situation?
Unlike Edward, I was not able to get out completely. I did get out, but there was a certain point, that's why I wrote the book, Opportunity of a Lifetime. There was a point at that time where I thought the risk-reward, the risk of losing more money probably would be around 10 or 20%, but the upside would be just marvelous. So using what we experienced in 1997, 1998, using the same experience where we saw stocks go down by 80 to 90%, and these were valuable stocks that we knew that were not going to go bust. We knew the same thing was happening in the US. No? So I was not able to sell completely, but probably sold enough to be able not to be bankrupt. But we knew that probably the market will turn, and it was opened up an opportunity of a lifetime. No? But it's true, people changed the way they traded. They were so cautious, they were so afraid of what happened in 2008. They were gun shy, I think that's a description. No? And so that's why I think you're seeing what happened, what the central bank did, no? And that created the 9.5 years, 10 years bull market. No?